For TraderInsight.com, I'm Adrian Manns, and it's time for your Daily Dose of the Doctor. Let's take a look today at something that's part of my trading plan each and every day, and this is the second portion of the plan. For those of you who subscribe, you're going to recognize this right away. This is called Stocks to Watch. And what I really want to focus on here is how you can set up your own plan, and if you're already using my trading plan, how you use this portion to go and generate lots and lots of extra income, right? The Stocks to Watch is a very strong component of the trading plan. I recommend that you look at this. Don't just look at those core trades. Take a look at everything that is in that plan each and every day. These are some heavy hitters, and they tend to be very, very good trades. Here we see we're looking at the plan. The first one is Autohome. This is ATHM. We see it's one of those expansion of range and volume setups that I call fastball. It's a long position. 49.10 is the entry. The maximum stop, we're going to go and validate that stop, is 48.80. The initial target, $49.55. We've got 50% to the target at $49.33. And it's really up to you here whether or not you want to use that rule. These tend to work pretty well when you just bracket them up and just let them go over the course of the day. So a lot of people like trading these, because what we do with them is just load them in the morning and then let them run their course. You don't have to be sitting in front of the computer. You just come back and see how they did a little bit later. So let's take a look at how Autohome played out, and then we'll take a look at the rest of the stocks that were on the plan for today. So here we see Autohome, and we see that we've got the stop right there, $48.80. And when I say I want to see it validate that stop, this first bar of trading does exactly what I'm looking for, right? It comes down, it touches that stop loss line, does not penetrate it, and then moves up through that 49.10 entry, gets us in, and look what happens. Boom, gets you right back out again, 49.55. Got a nice 45-cent per share profit. That is a very nice thing to have happen in the first 5 minutes of the day. Then, if and only if you want to do this, you can look for second entries. You can take second entries on these just like you can on the first part of the trading plan, on the around the horn portion of the plan. And what you want to look for is this move down through 49.10, right? It gets down under the entry price and then reverses up through it, and look what happens. You get another trip to the profit target. Now, are you going to lament all this extra upside that the stock had? Some of us do, some of us don't. For me, the most important thing is I capture the portion that I was planning to capture. And after that, if I was lucky enough to be on board for all this, that'd all be gravy and fantastic and everything. But, not the way it played out. So did I leave money on the table? Yes. But I also booked 2 trips to the profit target. Let's take a look at the next stock on the Stocks to Watch trading plan. Here we see that we've got CCI. This is Crown Castle International. In this case, we've got an infield fly, short side setup. Infield fly, just that, for you candle guys, you recognize what this little bar here means too. But, I like bar charts, do my best thinking in bars, if you know what I mean. But the CCI infield fly short setup triggers at $85.32. I've got a maximum stop on this one, $85.60, and I'm looking for $84.90 on the trade. So I got some good ratios there. Everything looks in order. And let's take a look at how CCI plays out over the course of the session. In this case, there's a couple things that we can do. You see that CCI opens right up around that stop loss. That stop loss is right up underneath yesterday's closing range. And when you see this kind of a thing happen where you get this bounce up into a central pivot, what you have, and all you guys who are boot camp attendees are going to recognize this, is an opportunity for an early entry when you get down through that pivot line, right? And then you're moving down into this stop loss. You've got some really good areas here to get an early entry if that's what you want to do, if you want to time it. Other than that, once we get down below there, we see it's tested here a couple times, and we see sort of what to expect up around that stop. So we might give a little bit more wiggle room if it came back up again, but the reality is when it breaks away like this and comes down, it's a good time to just bracket the order up and let it go. $85.32 gets us in. It wobbles around a little bit here, and this is why I'm saying, you're better off just leaving these wide open usually. You can use the 50% to target rule, move that stop to break even, but that's going to get you out of the trade, and then you got to get right back into the trade again. But take a look at what happened. Came back up to the entry price and straight down to the profit target, right? So Nice first entry, nice clean entry on that one. If you just go bracket the order up, it just winds up taking care of itself. Now let's take a look at the last setup. This one was in FedEx. FedEx was also an infield fly setup. It was on the short side of the market again. Our entry 170.61. The maximum stop we're going to accept on this one, $171.32. The initial target, $169.55. So again, 50% of the target's labeled there, 170.08. And let's take a look at how FedEx played out over the course of the session. Wow, right? So we've got our stop is right there, 171.32. It's validated first thing in the morning. FedEx does not break through it. Comes down, 170.61 triggers us in. 5 minutes, 10 minutes, profit target, 169.55. That's a big move per share. So you've got over $1 in profits per share of FedEx traded. $1 a share for 10 minutes worth of work. Comes back up again. If you want to take the second entry, again, here's your opportunity. Comes back down, nails it again. Now you're at $2 a share for the day. That is much better than a poke in the eye. And once again, I just want to encourage you, focus on every single component of the trading plan. The around-the-horn portion of the plan, the stocks to watch, and the stocks and sectors on the radar. And if you're not a subscriber to the trading plan and you're putting together your own plan, same thing. Make sure that you've got things prioritized. Make sure that you've got things organized by how they tend to work. Get yourself in front of the opportunities every day. See to it that you're pulling some money out of the market. And before you know it, you're going to be very, very happy with a trading system that you're able to trade almost as if it is completely automated. Set it, forget it, come back and count the money, right? Everybody wishes it was that easy, but in this case, it really is a very, very nice way to trade. So listen, if you have any questions, shoot me an email, adrian@traderinsight.com. Remember, if you're already on the trading plan or if you've been on the trading plan for a while, if you have any questions, pick up that telephone and call me, and let's talk through them and make sure that you know what you're doing and that you're doing everything right. I hope you all had a great trading day today and an even better one on deck for tomorrow. The best trader education anywhere, only from traderinsight.com.